And welcome. It's Declan here with another video. And today it's just a follow-up to the YouTube short that I did a few days ago. So in that I said that Carnival Cruise Line was reporting their earnings on Friday. So I just have an article here now. Carnival shares shed 23% on ballooning costs, dragging cruise stocks lower. So yeah, this was published on Friday, September the 30th. So shares of Carnival fell below their pandemic lows Friday after the cruise company posted third quarter earnings that revealed higher costs. Shares of Norwegian and Royal Caribbean were also lower. Friday's losses knock about 2.5 billion off Carnival's market value. Shares of Carnival fell below their pre-pandemic lows Friday after the cruise company posted third quarter earnings that revealed higher costs associated with inflation, supply chain disruptions, and the maintenance of health and safety protocols. Yeah, so the higher inflation is really hitting companies hard at the moment, and it's having a knock-on effect on their balance sheets. And then their earnings calls, the estimates that are analysed are wrong, and there's just so much uncertainty. So shares of Carnival shed 23% during the session. Now, that was yesterday. Today is Saturday. The markets aren't open. Like 23% is a massive drop. Like if you had a good lot of money invested in Carnival, yeah, and you're waiting for the earnings report, 23% if it could have hit your stop loss. I don't know what your stop loss was if you had shares in Carnival. Personally, I don't have shares in Carnival, but yeah, 23%. The stock closed at a new 52-week low of 703, below its pandemic plunge lows of April 2020. Now that's extremely significant when shares traded around 780 intraday. Yeah, 780 intraday is what they were trading in April 2020, and they fell below that. So Friday's losses knock about 2.5 billion off Carnival's market value. Another massive blow. Shares of Norwegian and Royal Caribbean also fell Friday, down 18 and 13% respectively. You often see this, say companies, say if it's tech stocks as well, or in this example, travel stocks, like it nearly always follows suit. If one has very poor earnings, then people sell out of the others. Say, so this is what you've seen here now on Friday, that shares of the other two companies have fallen also. So Carnival reported adjusted net losses of 770 million or 65 cents per share on 4.3 billion in revenue. Operating costs and expenses totaled 3.4 billion during the quarter, compared with costs of 1.6 billion in the third quarter of 2021. Yeah, and a major jump. Carnival said bookings improved 15 percentage points from the prior quarter to 84%. Like, bookings are healthy. That's the strange part about this. The company that compares with 54% occupancy during the same period in 2021, when COVID restrictions were loosed, and that did improve things in 2021. But like, travel and airline stocks and companies have been massively hit now since 2020, and they are struggling with big debts on their balance sheets now as well that they have to clear and try and clear. Despite government's relaxation of pandemic era protocols in both the US and more recently Canada, the company is projecting fourth quarter bookings below 2019 levels at lower prices. Again, like, the fact that their bookings are going to be below 2019 levels, that's even before the pandemic, and they're going to, whatever people they do sign for bookings, they're going to have to do it at lower prices. That means, yeah, they're going to be hit again because of that and their profit line. So cruise companies across the board are struggling with massive debts taken on during COVID lockdowns. Yeah, that's what I was just referring to a minute ago. Carnival on Friday morning reported 1 billion in principal payments so far for 2022 and a total of 9 billion due by 2025. They're the massive debts that the companies have now because of COVID and everything. So I'll just go on to I have Carnival stock market chart open here, and you can see I have it open on the daily performance, and you can see like it was trading up around the $26 mark at its peak before dropping down 2022. It was healthy enough around February, March of 2022. Things had improved again, but like as you can see, it's been on a steady decline. It's fallen below the 20-day, the 50-day, and 100-day simple moving averages, and it's well below them all at the moment. So the performance per week, you can see it's down minus 21.45%. Performance per month, 25.69. Performance per quarter, 20.29. Performance per half year, minus 65.23. And performance per year, a massive minus 71.89. So yeah, this is not good for shareholders of Carnival Cruise Line. Like the target price the analysts had set is 1403. It's at half that now at the moment, and it's traded in a 52-week range from 810 to 2657. So as I said earlier on, it had been healthier, a lot healthier share price wise a while back, but like with the pandemic and like the COVID restrictions have been reintroduced, and they have massive debts, and they're having to sell at a loss now. And like they offered a lot of discounts to help people, to try and encourage people to start to book cruises again. Like, and all that's hitting their profit line, and the fact that that they have a lot of debt. So like as you can see here at the top, this is the day. It's down minus 23.25%. So it's down to 703. And that's the lowest it's been since I think it was 1992 or 1993. So I just said I'd give you this update on Carnival Cruise Line and how it's been doing after it had reported earnings. And it's dragged a few more cruise ship airline stocks down as well. So thanks for watching, and if you gained value from the video, please hit the like and subscribe. I'd really appreciate it. Thanks for watching, and until next time, take care.